Hello, welcome back. Christopher Aaron here. It is Wednesday, April 8th, 2020. A couple of special announcements before we get into looking at the charts for the markets. First thing is, this time next week, I'm going to be opening a special trial to our premium subscription, which is going to be 2 weeks of complete access to everything we've ever published, all for $1. That will be announced this time next week, so make sure you tune in. You can get access to that, including all of the special videos that we are publishing right now having to do with the coronavirus and the markets. That is the first thing. If you don't want to wait for that, check out the link below to sign up today. The second thing is I was speaking with a colleague today. This is a bit of a personal story that I want to share with you, and then we'll look at the charts. I was speaking with a colleague today, and we were talking about the markets, especially about gold and silver, but we were also talking about this time period that we're living in. How are we getting through this time period? What are some of the strategies that we're using to navigate this with the insanity of the coronavirus and what we're seeing around us? And something dawned on me as we were talking, which is that a strategy that I'm using right now to get through this is something that I learned when I was overseas in Afghanistan. And I want to show you a few pictures from when I was overseas between 2006 and 2009 so you can get a sense of what I'm talking about. And then I want to share with you the strategy that I think can help when we're talking about navigating the crazy time that we're all living through with this war on the virus. So let me just pull up a few of these pictures first. So this was the base where I was in eastern Afghanistan in Bagram. I did 2 6-month deployments. Here's the plaque that they show. And the conditions were very Spartan, very harsh. This is what the base looks like from an aerial view, and we would have about 20 soldiers living in one little plywood bunker like this. And of course, I myself was not a soldier. I was a quote-unquote DoD civilian specializing in intelligence analysis. I was doing analysis of the satellite and drone imagery programs, but I was on the base living with the soldiers, eating with the soldiers. I had a gun, and we would have mortars shot over our heads and suicide bombs going off in the middle of the night, and we'd have to run out into these shelters here and sometimes wait for a couple hours at a time for the sirens to go off. And then when you look outside the base, you see real destruction all around, minefields and completely blown out buildings such as this. And so, you can see how people were living in the surrounding areas. It was very Spartan and just a lot of pain and destruction in general, I would say, in the outlying areas. Our conditions, as I said, very sparse. This is a typical picture of how we would live inside those plywood bunkers. You'd have 2 bunk beds like this. You'd have basically a 6x6 little cubicle with a curtain over it, and this is where you were for 6 months straight. The bathrooms, you can see what these were like. It really made an outhouse in the middle of the woods seem like something luxurious and comfortable in comparison. But then amidst all of that, austerity, if you would, there were also moments of beauty, and there were things that you could see that reminded you perhaps of something greater, something beyond the immediate moment that you were in, or the pain that you might be feeling, or the boredom or the frustration. And there were glimpses of life in other realms outside the base. Here we see some of the children in the neighboring village. A young girl here at one of the entrances to one of the villages. And of course, some animals. And so there were moments even being in the middle of a war where you actually had glimpses of beauty amidst the chaos and the war. And something that I learned through this time is that the most important strategy for getting through a difficult period like this was to actually not try to fast forward through the time. So what we're going through right now with this coronavirus, this has already been going on for almost 2 months. And let's imagine if this lasts another 3 or 4 months, right? And maybe there's another episode like this in the fall or this time next year where there's another lockdown. So this is very similar to fighting a war. It's like we're fighting a war against a virus in some kind of way. And we can talk another time, and we will do that, about some of the infringements upon our civil liberties that are occurring right now, which I'm very concerned about. But just to bring it back to the strategy. So I was speaking with my colleague today. The number one strategy that I used while I was overseas for getting through that time was to not try to fast forward through the experience. It was actually embrace the experience, embrace where we are right now, embrace the chaos, even if you would, and find those moments of peace, even in the chaos. Because when you try to fast forward through, any part of your life, you try to say, I just need to get to the other side of this, then I'll be happy. Or I just need to achieve this, and then I'll be good, right? That's a fallacy, because that time never actually comes. And when it does come, it's never actually quite what we're imagining in the present moment. And so I think the experience from the war and here, this war on the virus, there's a lot of similarities. So I just want to encourage you, as we close this introduction here, to embrace where you are right now. We are all going through something very similar. But if you actually embrace it and be with where we are, as opposed to trying to get to the other side of it, you will find those little glimpses of joy and beauty along the way. And you may even learn some things about yourself in this process that you wouldn't have learned otherwise. So let us turn to the charts with that said and see where we are. Okay, so we are back in front of the screen. That was actually recorded on the 8th of April. This is now early morning on the 10th, and we're going to have a proper gold and silver price update. Now, I do want to remind everyone, especially those of you who are new to watching this channel, I have a split view on precious metals because, first of all, I do not sell precious metals. And so I'm able to speak my mind a little bit more freely, I do have to say, than those who, let's just say, they always want you to buy precious metals. That's the first thing to understand. So, secondly, I believe in owning precious metals as a core holding within one's portfolio, especially during times like this and especially with physical gold. Now, when we get above and beyond that core holding, that's where we have to start getting a little bit more careful. And so, at the same time as I believe everyone should own some precious metals, I am going to be bringing to you some of the warning signals that I'm looking at right now, which are telling me that this move that we have seen, and let's look at gold here. This is the spot price of gold over the last 3 days. Some of the signals that I'm seeing are showing me that this advance that we've seen over the last several weeks may not continue in this sort of way. And in fact, a significant retracement may be setting up within the intermediate future. So we're looking at the spot price here, as I said once again. This is closest to the quote-unquote real price of the actual bulk bullion, as we would call it, for gold. Now, there's a difference. An interesting thing is happening right now. We're looking at the futures contracts, the settlements for gold futures, extending all the way out into December 2021. But the active futures contract is right here. It is the June contract. You can see that by the total number of contracts traded, the volume. So the active June futures contract settled today at $1,752. This is one of the largest differences between spot and the futures price that I have ever seen. And I've been studying this market now for over 15 years. So we're seeing something very interesting happening here. This is actually, I have to say, a lot of people are making this out to be an extremely bullish development for gold. It's actually less bullish than if we were seeing the opposite, which is there should be a high premium for the front month contract, the early contract, and less of a premium for the later contract. That would indicate that there was a high demand for gold right now. So, for example, if we saw the closer contracts with a higher premium than later contracts, that would be called backwardation. We saw that back in the crash of 2008 for a while in the gold market, where investors were wanting oil now. They didn't want to wait for the future. We're seeing the opposite now. So when you see this high premium on a futures contract, which is still almost 3 months out, it's not as bullish as some people are making it out to be. We are going to focus on both the spot price and the futures price in these videos, and I'll try to be as clear as possible which I'm referring to. The spot price is still the closest to the underlying commodity price. When we look at silver, nice move over the last couple of days as well. And we're seeing the close into, now markets are closed for Good Friday, starting today in Asia, and this will continue tomorrow through the United States. Now, when we look at silver in comparison to gold, this is one of those first warning signs that I want to bring to your attention, which is telling me that the move in gold here, we could see gold in the middle, silver in the bottom, dating all the way back to 2002. And this is the gold to silver ratio on top, or the number of ounces of silver required to purchase 1 ounce of gold. And we can see, so gold is getting into this target zone that I had calculated all the way back here when we broke 1400. This target zone was calculated between 1711 and 1823. We are now within that target zone, at least when we're talking about futures prices. But notice what is happening as gold has been moving higher. The gold to silver ratio has been breaking out. It's been breaking upward beyond a multi-decade resistance zone. This has never before been the sign of a sustainable bull market in gold. And so this is a warning signal right now that perhaps the move that we are seeing is going to give back a portion of these gains over at least the intermediate term future. I'm talking about at some point later on this year. The target for the gold to silver ratio, just to let you know, is still outstanding. We have a target which is equal to 138. We have not hit that yet. It is based on the amplitude measurement of the entire multi-decade consolidation here, which is 54 added on to the 84 breakout point, which gives us a target of 138 ounces of silver to 1 ounce of gold. So it indicates that silver, even though it has lagged already, should even lag some more as gold continues to move its way higher. This is simply what the charts are telling me. I am not saying this means to sell all your silver. I'm not saying this means to not buy any silver, especially if you don't have any at all. But I am saying this means to have a bit of caution, especially above and beyond what some of the perma bulls would be telling you. This is what the data is showing us. And so the other warning signal that I'm strongly focusing on right now is the difference in the valuations that we are seeing between gold, here shown on the bottom, since the 2011 peak at 1900, the 4.5-year decline, 4.5-year rise out of the lows, and the gold mining complex. These companies, their profits are leveraged to the price of gold. That's why as gold fell 45% over these 4 years into the 2015 bottom, the valuation of the gold mining sector fell by almost 80%. And then on the way higher, when gold moved up by 30%, the gold miners moved higher by 200% in the 2016 surge. However, something is happening right now which is different from what we should expect in a sustainable bull market, which is that we see gold now almost $400 above its 2016 peak. And what do we see from the gold miners? They are below their 2016 peak still. This is an ominous warning signal. Again, this takes into account all the known fundamentals. Because if you know a fundamental, let's say the fundamental is, well, the Federal Reserve just announced unlimited QE, okay? Yes, that's why gold is higher. The gold mining investors also know about unlimited QE, but they have been unwilling to bid the valuation of these miners above the 2016 peak. This goes for all known fundamentals. They are all incorporated into the current price of an asset, whatever that price is. And so this divergence right now, where we are based on the gold miners versus gold, is calling for gold to fall back several $100s. If you look at where we are in this model, below the base resistance zone shown in black here, we should be coming down in gold to below the low 1400s is what this model is calling for. It may not happen immediately. In fact, gold may continue higher here before this model begins to exert itself. Gold could even approach or nominally exceed its 2011 high before this happens. And at the rate this is going, with gold moving $100 every couple days, this could happen next week. So what I am saying here is this does not mean you should sell all of your gold. This does mean you should use some prudence and really think about this closely. All I'm offering is the data here as it appears plainly on the charts. You guys can see these charts just like me. And I think this deserves some consideration into your game plan, especially if you're using a lot of leverage, and especially if you're considering investing money that, let's say, you intend to use a year or two from now, and you're thinking, well, gold's going higher, maybe I should just put that money into gold, and a couple years later I'll have a lot more money for whatever it is that I want to use. Maybe not, because what if we are actually closer to a top within the intermediate future because of that underperformance that we are seeing in the gold mining complex, and because of that breakout that has still not reached its target in the gold to silver ratio. So we look at all of these things and more. We do videos just like this in the premium service, Precious Metals Intelligence. The last one that went out was over an hour long. The next one, which will be coming out on Monday, will be approximately an hour long. And as I told you guys, next week here on YouTube, I will be opening a special 2-week trial so you can watch all of the videos that we have ever recorded for only $1. So announcements will be coming on that this time, plus or minus next week. If you don't want to wait for that and you want to sign up now, I highly encourage you to do that because there are a number of important members' questions. For example, we answered a question about the best way to buy gold now given those astronomical premiums that we are seeing, for example, on gold eagles or gold coins or silver coins, for example. We're seeing certain dealerships that are selling silver for $7 or $8 over spot. Do not buy silver for $7 or $8 over spot. There are ways to buy it for closer to spot, and you should be doing that. So we answered that question in the members video from 2 weeks ago. That is called Precious Metals Intelligence. If you would like to speak to me one-on-one, Christopher Aaron, I am here for you. I simply look out for the best interest of individuals. We perform research together. I present that research to you. We do strategy sessions, tailoring the analysis to your individual situation. I work with investors from across the spectrum, including those who are just beginning, who have never bought gold before, all the way to those with multi-million-dollar portfolios that are looking to diversify within the sector. So know that I am here for you. Either way, make sure you hit the big red subscribe button below this so you'll be notified when these videos come out in the future. And I do want to thank those people who are supporting these videos on Patreon. I want to close by just getting back to some of those themes from the beginning of this video. I know this is a very challenging time that we're all going through, for me as well. So we are all going through this together. I think some people have it easier than us. Maybe they have more people around them for whatever reason. Some people have it worse than us, though. I think we should remember that. And we should be thankful for our blessings where we can find them. And just to go back to that takeaway that I arrived at, what I realized about this time, what feels most similar to me based on my life history, are those times that I spent deployed overseas. And one of the most important things that got me through that period, in addition to praying, in addition to exercising, in addition to trying to take breaks and get fresh air, was embracing the moment, actually being okay with it and being in it, and seeing what is inside this moment that we are all at. So I thank you for tuning in. Please look out for the update this time next week. Be a little bit careful here in the gold market. It's moved very quickly, and we have a lot of evidence that there could be a correction on the near horizon. Thank you for tuning in.